Hey everyone, I'm back, and today, I want to talk about bull market and bear market life cycle. And specifically, I listened to this really good podcast, and don't worry about it. I'm going to show you right here on the screen that which podcast I'm talking about. And the guest was Jeremy, and what I liked about that podcast was the person, the guest, had 40 years of experience in investing markets. Plus, you know how much money he's handling? $146 billion. So we can take a grain of salt that this person is tremendously knowledgeable and he has vast amount of experience in the markets. And if he says something, then we should listen to it. Also, before I tell you what was the podcast about, and if you want to find out how can you protect yourself from upcoming downturn, please like this video. I want you guys to convert that beautiful gray button into the beautiful blue button. Yes, smash the like button. Also, if you guys haven't subscribed, subscribe please, and also let me know in the comments that if you guys are interested into this kind of videos, and if you do, then I do read a lot of books and I also listen to a lot of podcasts. I can obviously make a 2 minutes or 3 minutes video about it. Yes. So let's get back into the video. So I want to specifically talk about market cycles, and the guest was also talking about market life cycle like bull market and the bear market in the podcast. Our guest Jeremy here draw a parallel line between 2000 stock market bubble and then 2008 housing market collapse. Also, he also shows something highlights of 2020 corona cycle bubble. So uh, you know, the person who was actually interviewing the Jeremy, he asked the question, "What do you think about the current market cycle?" And the question was, "Are we in the bull cycle? It means that the bear cycle is behind us, and we are out of the danger zone, and now the market is gonna keep climbing for another 10, 15 years." And Jeremy actually said, "Nothing is over. The crash or bubble hasn't popped yet." And he gave parallels like back in 2000. He said, the very first thing which collapsed was penny stocks, because whenever there is a higher confidence in the market, the people who are initially buying the stocks, like retail investors, are really in confidence of buying anything in the market. So what will they do is they will start buying penny stocks because those are really cheap stocks. Those penny stocks starts climbing, and when market crash starts, bubble is popping, those penny stocks will be hit really hard. So now he gives an example that in 2020 during March, the very first things which broken down, so those stocks, Russell 2000, I think that's the index which is consolidated of penny stocks, it fell really hard. I think 50% was the decline of that index. And then from there he gives an example that, do you know what will fail after the penny stocks collapse? The company who doesn't have products. So he gave an example back in 2000, pets.com. It was a really big company and they spent a lot of marketing efforts and no products at all. So they said that company failed. And then he gives an example here that QuantumScape is the new pets.com. It is good that they do have promising technology, but do you know when on the heights, QuantumScape's stock was worth $100 and the market cap for that company was $55 billion, and without having producing products, no production, they weren't actually delivering products to people. So he said this kind of companies who doesn't have products, they are just idea, will start failing. And a parallel line was again drawn from 2000, and now we have actually seen that the QuantumScape has declined. Nikola was burst. Also the companies like Hertz, they were in huge debt, they also collapsed. Now he says, what would be the third wave after this kind of companies will collapse? Third wave would be the company who has a revenue, and he compares to an Amazon back then. Amazon was collapsed 90%, in 2000, and he says maybe Tesla would be the another scenario here. It has already dropped from 1,000 to $600, and maybe other good companies like Desktop Metal, they do a 3D printing. Other companies like SoFi and many such big companies. And he give an example that these companies do produce products and they have a really long term good future and good prospect. for the shorter term, right now everything is in the bubble, and when the market collapse, this company will also be hit really hard. So he gives an example here that you look at penny stocks fall from the March, and then the quantum scale companies like also fall, and then now the Tesla, Dextro Metal, even though the revenue numbers were really good last week, they're still falling. And he gives an example in this cycle, Nasdaq and S&P 500 is still up. So he says here that until Nasdaq falls 30%, market is not going to be recorrected, and all the companies right now is hugely overvalued. So the next fourth wave, he says that the FANG company will fail, and back then in 2000 IBM failed because IBM was the biggest company back then. So he gives an example that please stay vigilant for next 4 months, and it might be that these companies will also start declining, and that would be the sign that bubble is already over. I think two suggestions here. If this is going to play out in next 6 months, then what we should do is when the market goes down, never sell the stocks. Your losses are not realized until you sell the equity. The second situation would be if you are in huge margin debt, cut down the margin. Try to pay down all the margin in next 3-4 months. You should only have 20% margin debt. So let's say a market falls for 80%, you can still afford the hit. And if it does happen, we are always protected. If it doesn't happen, then we are still in the plus. So I think that's my suggestion here, and I would end the video right here because sun is down, and I'll see you tomorrow with brand new day and brand new idea. I'll see you tomorrow. Bye.